Hello traders, I hope everyone's having a good day, and we're going to be talking today about price action structures and momentum. This talk is for educational purposes only. You guys are reading this very carefully with great vigor and attention. I am JR Romero. This is my prison mugshot post Alcatraz release. So why do we watch momentum? Well, momentum is a great tool for us to understand when reversals are about to occur, when ranges widen, when they narrow, and for us to understand the viability of triggers intraday, that would be exits and entries. So the analysis of past momentum can help determine the current move and how it will likely most play out. It is the ultimate tool for understanding the laws of cause and effect, as we discussed on Wednesday. The market likes symmetry in all things, and momentum is the ultimate confirmation of symmetry. So basic terms: igniting moves, that is the first move in a sequence. A secondary igniting move, of course, is the secondary move in a sequence. A retracement is a digestive pattern that retraces the initial igniting move. A reversal is a change of trend from the igniting move. Comparing igniting moves helps us gauge the current momentum. The measured move occurs if the same momentum from the previous impulse move persists. That is why measured moves are much more effective when momentum is on our side, and why we don't do things like, I don't know, trade at 12:30 in the afternoon on a quad witch day. So proper gauging of momentum helps us find targets, knowing when to change targets, knowing when to exit and why. This is important technically, but it's also important psychologically, right? There's nothing worse for a trader's mindset to enter or exit a trade without full confidence as to why that action is being taken. Type 11, if you've entered or exited a trade out of emotion, especially on the exits, only to have the trade do exactly what you thought it would do, creating not only fear of missing out, but a great deal of frustration. And what does that do to your mindset for the next trade? The next 5 trades, the next 10 trades? Is that a helpful outcome? So, the key elements of price action. Please tattoo this on your foreheads: angle, symmetry, price velocity, and time measurements and decay. This is how we gauge as technicians how momentum is doing and how we can expect momentum to either continue or change. So let's talk about angles, including here a little Dwight Schrute meme to kick us off. So here is a leg 1 and a leg 2 of an uptrend, right? And what has changed here on the 4th leg? What's happening? Don't worry, you'll be graded on a curve. The angle of ascent has changed. Has the angle of ascent changed now to beneath the trend line? Yes, we're losing momentum. Correct. It's a shallower move. So in terms of the 4 keys of price action momentum, has the angle changed? Check. Has symmetry changed? Check. Is price velocity most likely changing here as we near this double top? Very likely, right? And what does that usually do to our time measurements and decay? Is this leg with a change of angle most likely through this double top going to give us a full measured move of leg 3 or leg 2? Most likely not. Most likely something different is going to happen into this pivot retest, right? So a very clear understanding that the footprints of momentum have changed due to the angle, symmetry, and price velocity is the first warning bell that momentum may be waning. Does that mean the uptrend is over? Does that mean the uptrend is over and somebody sells something? Absolutely not, right? But it means we need to start looking at this move in a different way. So here's an example of a change in momentum, right? What's happening here? The price is now hugging the bottom line. It has not even given us a straight directional line to the double top, right? The angles have shifted. Volume in most cases here would be lower. Symmetry has been lost. What pattern is being formed before the channel breaks? Not a trick question. Yeah, exactly. That's a rising wedge, right? This is one of the bread and butter moves in this room. We get a change of momentum, price hugging a lower trend line. That
Ukraine
lower trend
Zelensky
line
says Russia still
now
has enough missiles for several more massive strikes.
becomes what? That lower line now becomes our ascending line in the wedge, right? Exactly. We incorporate that into the wedge. So as we see price hugging the bottom of the trend line, the angle shift, the lower volume, the loss of symmetry, we understand that a change in momentum is around the corner, right? Most likely leading to a reversal. Is it fair to say that a reversal measured move the size of the two-wave corrective is extremely likely here? Extremely likely. That's correct. Okay. So now we have a channel here, legs 1, 2, and 3, and we have now a change in angle, right? We didn't get a two-wave corrective here. If we had gotten a two-wave corrective here, what would that be doing for us? What would that be telling us? Two-wave corrective back to the channel trend line. Leg 3 is over, and we can expect most likely continuation, a sideways channel, or a reversal. Most trends, what is the probability that a trend continues? Not a trick question. You price action traders know this. It's 80%, right? Statistically speaking. So in this case, leg 3 continues higher. But does it go through the upper line? What's happening here? Talk to me. Yes, and this is a Bertha, but the point is that our angle has changed, right? Changing the velocity of the move. We're not getting a voluminous breakout through here. In this case, the angle changes, signaling what? What's most likely to happen here? Right. So we have drawn here 4 narrative outcomes. In pink, you have the beginning, the left side of a rounding top, right? Some people will see, and I'm sure this has happened to many of you, you see the loss of angular momentum, right? And you take a short here at the break. Now, in terms of time, the retest between this leg and this leg, is it longer than the retest between this leg and this leg? Do we have time symmetry? No, right? So in this case,
Colombia raising their benchmark
get
rate 100 basis points,
the break of the trend line. Oftentimes, you get your two-wave corrective move off the trend line which sets you up for another decision for the market. In this case, I'm citing the following examples here. A few possible outcomes form, right? And this is where understanding the language of price action structure can keep you out of a lot of trouble. So the pink line gives you a rounding top, right? This is a very powerful short pattern, and usually you get as support the corrective leg after the corrective pivot after leg 2. However, a very possible outcome is that you V-bottom. How many of you guys have experienced this? You take the break here, you V-bottom right back to the top of the high pivot. What could possibly happen here? If you're a price action trader, what are the possible outcomes you're now thinking? What could possibly be happening now? Understanding what the possible outcomes out of a V-bottom break on an extended third leg of a channel is critical to your success. What could possibly be happening here? Correct. Narrative 1. You stop out the shorts here, you make a higher high, and you reacquire the channel. Bears come in and hold the higher pivot low, right? This ends up becoming a what? What do we call this? It's definitely a new sequence. It's a bear trap, right? It's a liquidation break and a channel reacquisition. At this point, once this happens, price action rule takes place. I'm expecting a two-wave corrective. Narrative 2. We V-bottom, it's also incredibly likely that the previous pivot becomes what? Exactly. The previous pivot becomes resistance. So off of points 1, 2, and 3, what's Uncle JR immediately doing? Come on, you guys are in the room every day. I flap my gum 7 hours a day. I'm drawing a what? A channel, exactly, a sideways channel. At this point, if we fail the pivot, I'm already extrapolating a trading range, right? So let's go back to the narratives.
Okay.
1,
100 counterparty
rounding bottom,
127 trillion at the
leg 2 target.
repo op.
2, if we take out the day high pivot and offers are lifting, and you see velocity coming back to the trade, I'm looking for the top of the channel line to be tested. 3, if I see the top of the pivot reject, I'm instantly looking for the market to form a range. Why is this important? You're like, okay, JR, this is nice and fancy. You're drawing lots of triangles all over the place. Why is this important? Why is this important to your decision-making algorithm and your psychology? Right. It helps you more accurately extrapolate the probabilities and outcomes of this current price action structure. What is the likelihood on an extended leg, okay, that has change angular momentum? What is the likelihood of narrative 1, meaning V-bottom and breakthrough highs? What is the likelihood of that occurring versus forming a trading range once the move is extended? This is a low likelihood trade, okay? This is fool's gold. This happens all the time because all kinds of things happen all the time in the market. But this is a low probability trade. Okay? Make sense? Yes, exactly. After you get this liquidation break, it's important because you've tested legs 1 and leg 2 very symmetrically, and then angular momentum has changed, the velocity has changed, and you've lost symmetry in your channel, right? So this retest is important. It's much more important than this retest and this retest and this retest. The first retest, right, isn't critically important because you have all kinds of overhead supply here and overhead supply here, right? People bought here and here and here, right? And they bought the test of the channel line. So this retest will tell you a lot. Now, once we go back here, I'm drawing all kinds of parallelograms, right? I'm getting all excited. I'm saying, guys, we're entering a trading range, right? Now, what happens with trading range the more they are tested at highs and lows? The more tests of a support, exactly, you're slowly eroding away at those bids, right? At that liquidity. Very good. What is the difference in these legs versus this one right here? The one that's peppered red and blue. What's the difference between these and these? Yes, the angle has changed. When I see a gentler sloping line, I start to get ready for a break. And in this case, right, in this example, you get one. Now, sometimes you get an angular change, you retest the highs, and this ends up being a base for an ongoing rally, right? So you have to watch those levels carefully. But what's important is in terms of the risk to reward to probability. God, I can't draw. You know, Chris made me a beautiful Illuminati diagram. The probabilities are incredibly important for you guys to understand, right? And the footprints of price action, the angles, the change in symmetry, and the velocity of the move inform your ideas about probability at each step of these pivots, right? So here we go again. I'm going to talk about two different kinds of ledge breaks, and these are important. You have a low ledge and then a piercing reversal ledge, right? My original mentor used to affectionately call these the "Who Killed Kenny," right? Because it's sudden and deadly. So here you have sharp angles, right? Sharp angles typically imply a sharp bounce within a range. And then you see the angle change. And what happens after the angle change? What are you doing here? And what does it mean? What's being formed? Exactly. And why is the ledge important within a range? What does it imply? Now, these guys, these structures are referencing this narrative number 2, right? Exactly. No one wants to buy this pullback. There are no buyers, right? There are no retracements. There's no offers being lifted. Bids are unable to hold price above this ledge. So what happens once you run out of buyers? Right. This type of drop is what we call a flush or an avalanche, right? It is sudden and it is deadly. Why is it sudden and deadly? because it creates, through time decay, a tremendous amount of imbalance between buyers and sellers. Market participants see this and they start salivating. And when the more obvious a trade becomes, what happens when a trade becomes more and more obvious to the market? What happens to the greed index of participants? Right, they pile in. What happened to all the longs who bought here and here and here and here, hoping that you'd get a breakout here and here and here? What happens? They're finding religion, right? Wall Street finds religion. And where are their stops set? Because they're geniuses. Where are their stops set? At the bottom of the base. Behold the pain trade, right? This is the nastiest kind of pain trade. You are running the stops on the longs and catching that measured move lower. Now, is this the kind of move that I'm expecting a very clean descending channel on, that is nice and symmetrical and angular, and you can play polka music to the background? Or is this a climactic flush? It's a violent and climactic flush. So what does that mean in terms of my disposition as a trader, right? Climactic flushes tend to do what? Exactly, Chris. This is a quick money scalp, right? The laws of cause and effect in terms of supply and demand imbalances make this a game of musical chairs for the shorts. The smartest shorts will cover into the move, cover into strength, while the greedier shorts are expecting a two-wave corrective. This is a low probability for a two-wave corrective. Oftentimes, you get this flush, a little corrective like this, and then what happens, guys? What structure forms here very often that punishes both sides? Exactly. You get your inverse head and shoulders, or even worse, you get your bear flag reversal, right? We call this pain trade all the time, higher, and then you get your two-wave corrective back to the pivot. Now, even for a nastier reversal, let's look at the piercing reversal. We play this a lot, right? I missed a little leg here. So the piercing reversal, right? You've got bulls buying here and here and here and here, right? They're doing the buy setup, they're buying the mid channel, and of course they're buying the breakout because they're a bunch of degenerates, and they're expecting a two-wave corrective. What happens on a piercing reversal? Why is this move down so violent? When you hit a level of overhead supply here. Exactly. Stops start getting taken out here, velocity increases, and then you're back to the who killed Kenny, right? Now it's even worse so. So understanding these structures can greatly inform your entries, but also inform your exits, right? Proper understanding and reading of price action momentum structures protects you in terms of your entries and makes sure you understand what to expect out of this trade. So let's talk about channel development and analyzing times, angles, and pivots. So this is a leg 2. I didn't have room for a leg 1, so sorry. So this is a leg 2, right? We're developing a channel. What happens here at the end of leg 2? Get a correction back to the channel, right? And then what happens? You retrace 50%, right? You come back to the channel, you break and you retest the previous pivot high on the channel. Right, there's another line here that I didn't draw, but this is your overhead supply zone that now, through the marvel of price action we call polarity reversal, has become support. Okay, so now everyone in the market, there's two things traders are looking for, right? One is the bounce off this pivot. If we get a bounce off this pivot, and we usually do, now all eyes are on previous highs. Can we agree on that? That makes sense? Okay, perfect. Okay, so now you have the two narratives, which we're going to talk about next. So let's talk about time development first. Do we have symmetry here? Okay, perfect, right? Do we have symmetry in the legs? We have symmetry in the legs. So until this point, right, this channel is completely unbroken. We have angular symmetry, we have length symmetry, and price velocity is thus far unchanged. All of our time measurements in decay look the same until this happens. Does this mean this channel is breaking down and failing at the leg 3 pivot? Does that spell doom? Are we saying somebody sell something? No, right? What could possibly happen here? We talk about this all the time. Maybe is the right answer. Correct. Correct. Our channel could just be widening. There is an invisible channel line beneath each ascending channel line and an invisible tops line above every tops line, usually one standard deviation, right? That's why people call those or use forks and fibs with great veracity. So, behold the extrapolations, okay? We have a lot of stuff going on here. You guys like the color-coded triangles? I thought that was and Bollinger Bands, correct? Absolutely, B. You got to choose your poison, right? Pick your poison. So, so we have a lot going on here. So now we're extrapolating a lower channel line here, right? We do this all the time. As soon as this happens, we're saying, okay, this pivot could just be forming a lower channel line. And we start measuring that this time measurement is key because it's going to inform us on future moves, on the symmetry of future moves. Okay? Ideally, you want this time measurement between this pivot and this pivot to be the same as the time measurement between this pivot and this pivot. Okay? Time development is incredibly important in the symmetry of trends. So let's recap. We have our lower channel line, leg 2, leg 3. After leg 3, as you know, I start to become cautious that we may have expansion of the trend as a widening channel or a complete reversal. Okay, so we reach the double top pivot here, and now we're looking for this parallel channel that we aptly drew to do one of two things: to break the pivot and retest to the upside, or break the pivot and retest to the downside. Now, there's many other possibilities here. You could also break here, flush, and form an inverse head and shoulders. I didn't want to give you guys triangle fatigue. But oftentimes you get a two-wave corrective that turns into a descending channel. So purple is descending channel. But also we have an upside bullish narrative that's also a bearish narrative forming here, right? So we have a two-wave corrective off the top. Now, this two-wave corrective is really important because a third leg here, if you double this leg, you get back to the channel line, right? At the top of the channel line, two things can happen. You can come in and hold the expanded channel line, or what else is forming here, guys? A head and shoulders pattern, right? So properly ascertaining the symmetry of this channel, right? We have four tenets: angle, symmetry, velocity, and time measurements. Understanding the symmetry of this channel, the upside and the downside, aids us in identifying the proper pivot point, right? Does that make sense? So, at this point, you have our two-wave corrective. We're at a critical point here, right? What could possibly happen here? What are the possible outcomes of this? What color is that? Aquamarine, whatever that is. What are the possibilities here? We can either channel, base and go, or we could form a right shoulder. Okay? Bulls are betting that this pivot in what could be a head and shoulders is going to hold. What happens when this pivot breaks? I'm going to call this 1. What happens when this pivot breaks? You flush back to the bottom of the trend channel, right? What do we call this in a head and shoulders? Right, this is a neckline break. This is why neckline breaks are effective, right? Do you maximize your results by shorting the right shoulder here as opposed to the neckline? Is this a better risk reward, you think? Absolutely. Now, to go back to this example, bulls, right, are expecting this pivot to bounce. And what are they setting as their target, guys? What's their target? Well, clearly day high, but where specifically? The freaking channel, right? They're expecting this widened channel to touch the top of the bottom ascending channel line, right? This is how we extrapolate targets every day. You guys often say, JR, your levels are like magic. You call out these levels and they seem to bounce so perfectly off the pivots. Well, sometimes I do, luckily. These are the tools we use to ensure that we're actually calling out levels that the rest of the market is seeing, right? You have to see what the rest of the market, the smart money, I hate that term, right? But educated technicians are seeing the same things. Is an educated technician going to try to go long here? Or is he going to say, okay, we're past the measured move here and we're at the top of the lower channel line, right? You got sellers here. Do you very likely have at least one retest with more buyers here betting that the trend will continue? Absolutely. What does it do to your psychology to see what the market is most likely to do? To stack the probabilities in your favor. Yeah. You're walking into a Japanese restaurant in downtown Tokyo, you're opening the menu and you're going, holy crap, I can read kanji. How did that happen? That's because you're reading the language of technical analysis properly. You're properly interpreting price action. Is it a coincidence, you guys think, that these time measurements repeat across bases to complete these moves? I would say absolutely not. Right? Absolutely not.
Further comments from Colombian central banks. Villa saying that central bank did not discuss FX intervention.
Okay, so here's a variation that I wanted to talk about. Oftentimes, you will reject, have your two-way corrective, test the previous pivot, and what happens here? What happens if buyers come in and buy this pivot? You start to form either a V-bottom and a platform, or a inverse head and shoulders, right? And then the market is extrapolating a measured move, technically, right? That's why these previous channels sometimes get bought, because momentum has shifted, supply-demand imbalances have shifted. There are no more sellers here, right? The buyers of this previous ascending channel are now coming in and buying them. That is why drawing channels properly, right, is absolutely essential to understanding formations in their proper context, right? People came in, bought the V-bottom, they bought the buy setup off the right shoulder, they bought the pullback because they're seeing a new channel form here. Make sense? So, the 3 commandments of angles, brought to you by Charlton Heston. So, slower moves tend to correct with more stored momentum and higher probability. Faster moves typically correct more gradually. Evenly paced moves lead to trading ranges. So let's talk about this. Rule number 1. That basically means shallow angles, right? We often talk about ledges in this room. So at the bottom, on the bottom left, you have an inverse head and shoulders with a shallow right shoulder, right? And on the right, you have an inverse head and shoulders with an angular right shoulder. The shallow right shoulder tends to give you much more violent flushes through the neckline than does the angular shoulder. Angular momentum tends to lead to more angular countermeasures, right? It's the same thing as the previous channel we were drawing, where you have angular moves leading to angular bounces, whereas the Who Killed Kenny, right, where you have compression in the form of a ledge and total demand destruction at the top of the range, it'll lead to a flush with greater probability. Thanks, Trader Steve. So the same thing goes for a double top reversal. I'm looking for that shallow, slow angle of ascent, right? We want a shallow angle, we want broken symmetry, and we want decreased price velocity. Decreased price velocity, slower moves, store momentum with greater gusto that lead to more precipitous reactions, right? Remember cause and effect from Wyckoff? This is cause and effect when it comes to the first rule of angles. Second rule, faster moves, faster, more frenetic moves take longer to consolidate, right? Oftentimes you'll have a frenetic, $8 bar in Tesla or Moderna, or $5 bar, or two $5 bars in Tesla. What often happens when you get such a frenetic move? It needs to catch its breath, right? It needs to retest, consolidate, right? If you have a voluminous move here, people are at the top of the range, run out of gas, right? You need to consolidate. Now you begin the delicate dance of profit taking and accumulation by people who missed this first leg in order to hopefully catch leg two. So a faster, more frenetic move often takes longer to consolidate. Why is this important? FOMO chasers, why is this important? Why is this important psychologically, technically, in terms of money management? Yes, setting the proper expectations for the move is critically important so you're not on the wrong side of the trade. Remember the SPY pop yesterday? Where the spiders popped? What do they pop? It was quite insane. This is the move we're talking about, right? And we said, guys, let's wait for the 50% retracement. This up move is still all in long, but we need to wait for the retracement and the bounce for the complete measured move. We call the measured move off by maybe 5-10 cents. But the point is that after a move like this, the longs need to catch their breath. The market needs to consolidate. You need to leave enough room for a profit taking and reaccumulation in the move, right? Does that make sense? Here's an orderly move by comparison. Do you see how in the orderly move, the time for the orderly move to continue is much shorter, usually in a trend? Rule 3, VTOPs and bottoms denote ranges. When you start seeing this, guys, ranges stay range bound 80% of the time, right? Now, there are places where we look for breakouts of ranges. This trade is highly unlikely to work. You're going to buy it here, you're going to buy it here, you're going to buy it here, right, until it finally goes. Is this long more likely, and why? Okay, a cup and handle. What does a cup and handle tell us? You're putting in a higher low, I think you mean, Ari? You're such a bear, you said it backwards. Yeah, so what does that mean? The range is tighter, compression is tighter. Are there any sellers underneath that cup? What are the shorts thinking? They're shorts that came in at every top, right? They're like, oh, okay, great. This is, we're range bound. I'm going to short every top. They're about to find religion, correct? And so, is this a better risk reward than try to catch the breakout? Absolutely. Why? I mean, you could say this is a tiny stop, JR. I can take this. What's missing? All together now. Ready? 1, 2, 3. Probability. This is a reaccumulation pattern on higher lows. What's this? It's a V bottom. What are the characteristics of that V bottom? There's a spring, correct? What else? What does a spring tell us, by the way? Trap shorts. That's right, General. So you're paying attention. trap bears. Did that demand zone hold? Piercing reversal, correct. Did that demand hold? Correct. And then what happened? What pattern formed within this zone? An inverse head and shoulders, right, which is a accumulation or reaccumulation pattern. What are these shorts thinking? These shorts are thinking, crap, our trade, their shorts are trying to catch a full measured move, a full bearish channel. I mean, who knows, right? This could be a distribution range at the very top of a range, right? Or it could be an accumulation at the very bottom. What's important here is the shorts have failed and you've re-tagged this higher pivot low, because ignore this part of the screen, right? What are shorts seeing here? What's this? Yeah. Did shorts take this ledge and short some more? Did they add to their short here? Right. So if you short here at $54, right? And then you short some more at $52, what happened to your average cost? Are you already in the red here as a trader? Yeah. You're red here, you're red here, you're red here. You're finding religion here, right? So traders who understand price action structure are betting that this spring signaled a rejection of the lows, a confirmation of the demand zone, and they're piling in here for a very low risk reward and a high probability. This is essential, guys. What understanding the footprints of momentum within price action gives you is a better grasp of probabilities. That is your edge in the market. So change of angles. Change of angles telegraphs slowing momentum. We talked about this. I'm just going to bring it home. The longer the bearish rising consolidation, right, the more stored momentum for the reaction move. Key concept, angle changes, time and conviction. Let's take a look at this. Why is example 2 at the bottom a better short, in my opinion, than the one on top? It's a longer ledge. What does that mean? What footprints of momentum have changed? Angle and what? Angle and time. More effort has been put into this move. More stored momentum is loaded here, which gives you a more violent move down. Think of a roller coaster, right? Like think of a roller coaster that goes like this versus a roller coaster that goes like this. What kind of stored momentum do you have at the top? You know when it starts going click, 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 and it starts to slow down? It's violent, right? All right. Okay. The same thing applies to bullish patterns, right? I will take a falling wedge into a previous level of resistance on a 5-wave corrective or whatever it is at the apex, which with much more certainty than a retest of a leg 3. This is very highly likely to bounce. This after leg 3, say this is leg 4, all these examples are after legs 2 and 3. Is this more likely to give us a 2-wave corrective or an expanded channel? Tension and release. Correct, T. Very good. So momentum and price action rules. Steeper and longer at the end of an igniting move are signs of powerful reversal. Same idea. You have equidistant time in legs 1, 2, and 3, right? 1, 2, and 3. What happened here at the end of leg 3?
About 40 minutes now from the close of pit trading in
what is this?
Energy markets ahead of the NYMEX close.
What are we setting up for here? Most likely.
2%.
Exactly. A buying climax. What confirms a buying climax? Wow, you guys have been taking notes. Sometimes I talk, I don't even know if you guys are paying attention. Oh, we got some trained ninjas in this room. That's correct. Volume. What else? Maybe RSI, stochastics. Squirrel. Yeah, those are all the signs that we have a massive reversal possibly building up. Does that mean the trend is over? No, right? It means we're climaxing out of the channel. The real things that are concerning is that we've lost angular symmetry, we've lost time symmetry, and now price velocity is working against this overall price move as it is increasing in pace and volume, right? So when this happens, guys, what am I usually thinking once we're like, I don't know, 1.5, 2 times the symmetrical time measure, and we're going parabolic here? What am I looking for up here? Let's bring it back to the first talk. Exactly, Chris, you got it, man. We're looking for signal bars on increased volume, right? Shooting stars, abandoned babies. What else? Boom shakalaka. I don't think that's a candlestick pattern. We can make one. Spinning tops. Exactly. Turnaround bars. All those work beautifully, right? And so we take our short. This happens. This is an everyday occurrence in this room, right? Once we get angular change of momentum, volume coming in, break of the trend line, the time measurement is all off. What are we expecting here? And what targets are we setting? What targets am I setting? You guys know how I trade. Yeah, tweezer is a very powerful signal. We're expecting a test of the channel lines, correct? And what form of corrective wave am I looking at for a retest of the channel line? Right, looking for a two-wave corrective back. Now, in this chart, we have some extrapolated moves here, and it's important that you guys start looking at the market this way. I don't care what strategy you're trading. I don't care if you're a turtle trader and you trade on a weekly basis, or you're a hyper scalper, or you doing C strategies, or whatever strategy you're using. The importance of this talk is about understanding the language of the market. What are the most likely moves based on the price action structure? Okay, so we come in, two-wave corrective back to the channel. We break this, what's the next stop? What's the next stop, guys? All right, high, correct. This pivot right here. What could possibly, I didn't draw this perfectly, but it's right here. So what could happen here? There's two possible outcomes, right? The blue line and the green line. You could have a massive bounce and a higher high, at which point what is forming here? A V, but what else? Whatever distribution pattern is forming. Yeah, you're forming a head. Correct. The other thing that could be happening here is after you two-wave corrective, you could get a shallower bounce. This is where angles matter, guys. Sharp angle, shallow angle. If we get a shallow angle, what am I looking at next? I'm looking at a ledge, but more importantly, what am I starting to draw? This is why angles are so key. A channel, ding, 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 right? We have 1 point, 2 point, 3 point, 4 point. At this point, I'm drawing this line, and off this line, I'm extrapolating the declining bottom line here, right? So shorts can come in here at the apex of this ledge, right? This could be a rising wedge. This could be a bearish rising channel, just a ledge. But here, you take this measured move, you extrapolate a channel, right? Is this price narrative likely, where you test the channel line and you go straight down? Is this a high probability? What would make this go like this? Bingo, banana split, news. So when you look at that price narrative unfolding, you should be asking yourself, oh wow, we just broke a very bullish trend and we took out the upper pivot. We might have news here, or a hell of a liquidation break, right? So going back, here we extrapolate a bearish channel. Here we're extrapolating a head and shoulders. Now there's a double top here, right? What's going to happen to the shorts who are betting a double top is going to work? The double top, not coincidentally, is also the upper channel line.
Now 2 hours from the U.S. cash equity close, 1 hour from
They're going to get squeezed. That's what forms your head and shoulders, guys, right?
7%, and the 2-year now down to 4.16%.
This is an involuntary reflex of the market. Now, shorts are doing what off this point? They're coming in, selling the market. This previous descending channel is what now for them? What targets do they have, possibly? Worse than buying Twitter. Well, they've got this previous pivot as a target and this previous pivot as a target, right? Now, longs are looking at this descending channel line and thinking, what? What are they seeing here most likely? A falling wedge off a declining tops line, right? So they come back in and the head and shoulders is formed and you have a new channel line right here. And the dance between bears and bulls continues. This is why price action structure is so important. I don't care what strategy you guys play. I just need you to understand what is unfolding so you can have proper targets and proper levels to play off of. And most importantly, you understand the worthiness of the trade by understanding not only what your risks and rewards are potentially by looking at the structures and the levels, but understanding what the likelihood of that trade working is. A lot of you guys are awesome at risk management. You're great risk managers, right? You set great targets, but they're low probability trades, right? Proper understanding of momentum and price structures keeps you out of trouble, not just in terms of making sure you ensure probabilities, but it creates a virtuous cycle in your psychology by increasing your confidence in things actually working. So here is an angles and channels, right? Now, what's the difference between these two channels, guys? We're almost done. If you're getting webinar fatigue, we're almost done. Don't worry. I think Ari already went on a beer run. The angles are different, right? Have you ever been in those like Boeing or Disney trades where you can barely discern a pullback? It just it's like a helium balloon, and it just keeps on going higher and higher and higher. Shallow angles tend to be less volatile and tend to stay in the trend a lot longer, right? That's why some people really like to trade that kind of price action. Sharper angles lead often to more upside and downside reversals. That's why this upper channel break is much more likely. Shorter time symmetry and sharper angles always lead probabilistically to higher chance of upside or downside reversals. And here is the lower channel break, right? On a stock that's just ballooning up gently, riding the 21, this channel break is much less likely. There's not a lot of bears shorting the tops aggressively, driving price down in an angular fashion with crazy two-wave correctives, right? Sometimes you'll see it slope like that and form a gentle cup, right? This break is much more likely. There are bears wanting to short the pivots. They're aggressively looking for a reversal. That is why these angular moves increase your probability if you're a break for a channel break and ultimately a reversal in momentum. So now let's look at a trend change. What do we have here? What is this? Come on, almost done, guys. A V bottom. What overall pattern is it? Yeah, it's an inverse head and shoulders, right? This inverse head and shoulders is piercing through the lower channel line in a climactic move lower, right? Bears come in. You put in a higher pivot low and a higher high. What's JR doing at this point? Compulsively. I can't even help myself. Right. You extrapolate the channel. Is a channel yet formed? Hey, I'm drooling. I can't help myself. A channel has not yet been formed, right? What is my number one motto? Extraordinary efforts produce extraordinary results. It is your job as a trader to extrapolate this pattern before it happens, so your OODA loop and your decision-making algorithm are not reactive, so they're proactive. So your decisions are made calmly and in a fully calculated fashion, right? 3 points, June. Okay, so
Mexico and the United States held constructive.
Here is your buy setup off the right shoulder, right? The first pivot the whole market is looking at is this one. I meant to line this up with this pivot line, so I know it'll stretch credulity here. I'm not good at drawing stuff, I'm sorry. But typically, you have two possible outcomes out of an inverse head and shoulders, right? The first is a range, which most likely leads to reaccumulation. And the second is a two-wave corrective, right? 1 and 2. What happens at the end of a two-wave corrective off of a climactic reversal, guys? Is it fair to say that decisions need to be made and that there's a very important price auction at this pivot? Yes, right? Not every point in the market, not every point is an inflection point, right? This is an important moment in this sequence. V bottom, inverse head and shoulders. This is your point of accumulation and reversal. Here we're drawing a channel and we're extrapolating a trend. It remains to be seen at the end of the two-wave corrective whether that channel will continue. So I've extrapolated what I typically look at. One, in green, the channel break. The channel break is very likely to retest what? The neckline, of course, and the previous sideways consolidation, right? Sideways channel, sideways trend. So what's most likely to happen on this bounce? Purely in terms of probability. I'm not talking about signal bar, I'm just talking about price action. Correct, a retest of the upper channel, right? So our price target instantly becomes a three-legged move back to this previous pivot. What's most likely to happen at the top of this channel line?
Advanced Biotherapeutics seeing some call activity. The March
Failure. Correct.
$7.5 calls are active in a spread.
Most sideways channels stay in trend, right? Now the third price narrative we have here is that after your two-wave corrective, you bounce off this channel line and confirm the channel. What do we call this? Continuation. T, you're on fire. Right. This marks, in my opinion, the beginning of a new active sequence. And it's confirmed by it holding the previous pivot. So now I'm expecting 3 legs up. Right? This is price action 101. So let's talk about the actual reversal narratives here. What's the probability of this happening? Is this a high or low probability? Buying this breakout and adding through the channel line. This is fool's gold, right? This is a stupid trade. Is buying here with a target taking half at the top of the channel and setting your secondary target at the top of this channel, is that a smarter trade? Yeah, absolutely. All right, secondary narrative. You had inverse head and shoulders, two-wave corrective, you hit the pivot. What could possibly happen here? If you fail, if your angle of ascent changes and you put in a lower high, what's in store? Correct, a head and shoulders. The bounce off the pivot after the two-wave corrective, you need to watch this angle. If the angle is narrow and you double top at the previous shoulder line, there's pain coming, right? Is this a low risk, high reward trade? Absolutely. Third price narrative. You're in this zone and then you get a Kilkenny. Is this a good risk reward? Yeah, exactly. So now let's look at the measured moves. Okay. This is your measured move on your head and shoulders. The measured move on your Kilkenny. And this is the measured move on your cup here, which is the bottom of the head to the shoulder line. Guys, this is how I draw my levels. It's not just about targets. It's about understanding which are your levels of liquidity in the market, which are your inflection points in price. It is critical to how I trade. So finally, price development on the reversal patterns. We have a variation here that I just wanted to show you guys, just to emphasize, and we're going to wrap it up here because the market's going to start moving with the quad wedge. What pattern do we have here as a bottoming pattern? Right. So we had 3 legs down, 4th leg with a bounce, and this is a shorter leg with a higher angle. Is this highly likely to bounce here with trend exhaustion? Correct. Is this a low risk trade? Correct. Not every bottoming pattern is a head and shoulders, right? We have a variety of accumulation structures and patterns we watch. And then the rest of the sequence unfolds in a very similar manner. So, how does this help me? And we're wrapping it up here. Understanding key levels with a better perspective. Understanding the likelihood of patterns working more effectively. Trading with more peace of mind. I cannot stress this enough. Beginner traders struggle with this more than anything else. Am I in the right trade for the right reason? Is my stop set correctly? Is my target set correctly? Are angle, symmetry, velocity, and time measurements correct? Is the tape moving the way it's supposed to? Etc., etc. I could go on and on. The more clearly you see the market in terms of how smart money is moving, the more you strengthen your psychology. Next, the ability to extrapolate channels more effectively. This is key. And the ability to draw better levels. This is how I draw levels. I get asked this question at least 4 times a day. That's your answer. All right, beautiful. So that concludes our talk. And we are back to the market. Look at that.